He is having a lot of fun and helping a lot of people. This gentleman has a PhD in finance and economics. This is your RX for Forex. This is our business partner. This gentleman I am turning this call over to is Dr. Craig Bythewood. Dr. Bythewood, are you on the call?
Yes, I am, Ms. Dyer. Thank you very much for introducing me. Once again, it gives me great pleasure to greet these rectangles, to see all of the energy that's emanating from this group. I'm always excited to be around individuals who are excited. The quest for knowledge, the thirst to learn this skill is just so obvious. And I really appreciate how everyone is jumping in and participating in all of the different ways that we are mentoring one another. So give yourself a pat on the back. Kudos to you for continuing to dial in and put yourself in a position of strength, a position of abundance, a position of wealth, a position of profit. So welcome to a talk with the Finance Doctor, your RX for Forex, where we're spending this time providing opportunities to put a salve on some of those economic wounds we may have experienced in the past, to put ourselves in a position to heal and to feel better and be better with our relationship with money. You know, let's keep it real for a second. We have a relationship with money. And regardless of how that relationship has been before, maybe it was smooth, maybe it was rocky, whatever it was, we need to understand that as with any relationship, you have to cultivate it. And so we're doing more than just learning a skill that we'll have forever, that we'll be able to put ourselves on the other side of money. We're also putting ourselves in a position where we're changing some paradigms. We're changing the way we look at things. We're seeing things a little bit differently. So continue to do what you're doing and to allow yourself to expand and grow. It is impossible to do this every week and stay the same. It is impossible for you to continue to view these markets and develop this skill and align yourself with this group and make an attempt to be your own bank and stay the same. There is a growth that is happening. And one of the things that, if you really just pause for a second and think about how the people around you are responding. There are only two ways that people respond when you start growing and you start expanding. They either want what you have and ask you questions and put you in a position where you're mentoring them indirectly because they want to feel what you're feeling and they want to have that swag in their step. They want their shoulders to be up and proud like yours. Or you get that resistance. You get that, And that's okay. People have their choice to do whichever one they are. All I'm saying is that if you really think about it, you're getting one of those two reactions from individuals around you because you are growing. You are expanding. So once again, I just thank you for putting yourself in this position of strength and continuing to get stronger and stronger and stronger. So as always, it is important to me in this call, it is important to me in this forum to let you know that I come before you to serve you as an individual who is not tied to any product, who can give you objective advice, counsel, and increase in mindset and awareness about every single component of the personal financial world. What is the difference between me and you? You've been going to work, but my work happens to be finance. So I've had the opportunity to be able to be exposed to it and have a little bit more opportunity to share with you simply because this is something that I've been exposed to. So one of the things I'd like to do right now is I'd like to pause from what I'm saying, and I want to welcome individuals that are on this call for the first time. I want to welcome any guests that may be visiting us because you are blessed. Why are you blessed? You're blessed because someone loved you enough to share this with you. Someone loved you enough to want to let you know that we are on the precipice of touching 1 million families and teaching them how to be their own bank and teaching them how to learn this skill that will allow us to continue to grow and expand. So those of you that are guests, I welcome you, and I share this with you very quickly. I received my PhD in finance and economics 25 years ago at 26 years old. And there were many goals that I had at that moment, but one of my main goals was I really wanted to do everything I could to help those. You know, one of the little known fact about me is I didn't become a finance person, or I did not major in finance because I was interested in the material. I was interested in the subject. I majored in finance because as a young man being raised by a single mom, I watched my mom continue to go through financial trial after financial trial, after economic tribulation after economic tribulation. So my mindset as an 18-year-old or a 17-year-old going to Howard University was, if I study this, then I can learn some things to help my mom, but better yet, to help individuals that I come in contact with through my adult life to help them to experience something different than what my mom experienced. So this whole subject to me is a labor of love. So guests, I want you to understand that I'm extremely happy that you're here, because for 25 years, I have only been able to give people that come into contact with me one thing and one thing only, and that is information. But now I can give them more. Now I have the opportunity to actually hand them a vehicle, to align them with a group, to let them know that I'm part of a company, International Markets Live, that was designed by people who accomplished a certain skill set in finance, but wanted to use it to help others. I wonder how many of you recognize that the married couple that runs our company, Christopher Terry and his wife, Mrs. Terry, he's the CEO and she's the CFO. They do not have children. So to them, we are their children. They're pouring into us because this is their way of giving back after having very strong careers in wealth building. Well, that's the way I look at this. We're in a situation where we're teaching people how to be their own bank. We're teaching people how to think for themselves, how to be able to control their own destiny. And by doing so, we are literally touching each other with the intent and goal and objective of touching 1 million families. Just think about that for a second. If 1 million families will be exposed to this opportunity, if 1 million families will be made aware that they can be their own bank and control their own economic infrastructure, if 1 million people are aware of that, imagine what we can do collectively to put ourselves in a better position. Imagine what those 1 million families will be able to do as a unit, as a group, when we come together and say, let's take this step. Let's build this sanctuary. Let's create this bank that is going to address things a little bit different than traditional banks. Think of all the non-traditional things we can do with our collective wealth, and more importantly, our collective mindset after we touch 1 million families. We're already doing it. We're getting up at 5 o'clock in the morning and we're trading together, whether you realize it or not. Yeah, I'm down with the pips. Yeah, I'm down with the money. But what really excites me is that you have individuals that are participating in a collective consciousness where our minds and our energies and our abilities to be able to grow and expand is being multiplicatively impacted. You could act like what I'm saying is not accurate if you want, but you don't have to unmute your mic for me to know this. You feel differently throughout your day after getting with us at 5 a.m. and getting with us at 9 a.m. There's a pep in your step. You're greeting people on elevators with a little different flair. You're talking to your children with a little bit more melody in your voice, because we are literally aligning all of this helpful, mentoric, creating our own infrastructure, be your own bank, build a better tomorrow, shifting paradigms, energy, and it's affecting each and every one of us. So guests, let me say it again. I am very happy for you that you're joining us. So guests, let me share with you something that I share with all of the individuals that come to these calls, and that is this. We are participating in a $5.3 trillion a day market. When you add the cryptocurrency space, we're participating in over $11 trillion a day economic activity. That's a huge piece of the economic pie. However, it is just a slice of the economic pie. And I feel like one of the ways in which we should utilize this call is we should use it to economically empower ourselves by being able to discuss those personal financial issues that we can master in an environment of objectivity. Personal finance is the only area of our society where those individuals who share with you information about the product are the very people who sell the product themselves. If you want to know about insurance, who do you speak with? An insurance salesperson. If you want to know about retirement plans, who do you talk to? You don't talk to your company, because your company just hands it off and aligns you with an individual who is an intermediary who sells retirement plans. So all I'm saying is there's such a benefit for us to sit on these calls and to ask questions where we can economically empower ourselves by understanding and having an awareness and perception of the entire economic pie. So with that in mind, I'd like to pause and ask if any person on this Zoom call, any person on a Talk with the Finance Doctor, any one of these rectangles, do you have a question? And one more thing, guests, I often tell the individuals who participate in these calls that we need to walk in the power of the unmuted microphone. The best conversations we've had on these calls have been when someone answers, someone unmutes their microphone and talks. Oh, the speaker could always come up with things to talk about. But when I can specifically address what's happening in your household, in your experience, there's value added. And hear me, this is the way the collective consciousness works. Every time you ask a question, there's another rectangle that had the same question, but either did not unmute fast enough or did not have the courage to unmute. So with that in mind, questions, comments, testimonies.
Dr. Byford, Gerald Roger.
Yes, sir.
Can you explain to us how debt equity and, debt equity, actually I'm conflicting my words, debt financing and equity financing, how does that have an impact on the foreign exchange market and the correlation between the stock market? And I've noticed over the last several days as the stock market, and because we've been doing a lot of work with the indice, when the indice is increasing, then gold is decreasing and vice versa.
Right. What a great question. There's so many layers in that question, and the answer to the question puts us in a position where we will do our trades with more authority and conviction because we'll see why something is happening. So let me begin the answer to that excellent question by saying this. I recently went to Orange Beach, Alabama for a faculty conference. And when I got to the gate, I didn't think about the fact that I had to pay for luggage. So when I got there and they said, oh, that'll be $30 for luggage. So I paused for a second and debated not whether I would pay, but I debated on how to pay. because I knew I had $30 in my pocket that I could take out. This was my money. It's in my pocket, so I own this. It's my own money. I could take out and pay the $30. But I also knew I had a credit card in my wallet, and I knew that I was going to use that for incidentals since most of these expenses would be refunded. So in that moment, I debated, should I use my own money or should I use the money that I owe? What do you mean the money that you owe? Well, if I used the credit card, I would have been using someone else's money, then I would have had to pay them back. Now, this is a tangent to the tangent to the tangent. Credit cards have very high interest rates. But I would have paid 0% because 0 times 29.9 is 0. But I still would have been borrowing money. It just would have been an interest-free loan because I would have paid the money off prior to the credit card being, or when the credit card was due. That's not the point, but it's the point in the point. I just answered his first question. I just shared with you the concept of equity financing versus debt financing. What's equity? What's the equity in your house? It's the amount of the house that you own. Equity from a corporation's perspective is the term that is used to describe the amount that it owns. And anytime you borrow money, what is created is a debt. So debt financing means you borrow the money in order to pay for it. And equity means that you use your own money. Now hear me. There's not a situation where one's better than the other. That's why I told that story exactly that way. Because there would have been a benefit to using my own money, but there also could have been a trade-off because I had to think about what I was going to do while I was there that may have required cash. There was a benefit to me using the credit card, but I also had to think about all the other things that had to be done, like the hotel and the incidentals, and think about what was there. So you see there's a trade-off. So debt financing and equity financing, just like I made that trade-off at the airport counter, that's the trade-off that companies use every single day. But understand that airport conversation I had with myself and the airport conversation that companies have with themselves, that's just what's called the primary market. That's just what starts it. What is relevant to what we do is the fact that there's a secondary market for equity and there's a secondary market for debt. What do you mean by that? Well, when equity is created, when I take the money out of my pocket and use it to pay, that's synonymous with a company asking a stockholder to take ownership in their company. So the stockholders taking money out of their pocket, giving it to the company. And in return, you have an ownership share. Well, on the debt side, it's the same thing. The company is borrowing from an investor. Now watch this. If you know what you're doing, you will always have a job. If you know why you're doing it, you will always be the boss. People think that bonds are investments. They are, but they are predicated on an infrastructure of a loan. See, that's how corporations do it. It's all about what you call things. So when you and I borrow money, it's called borrowing. When they borrow money, it's called issuing a bond. So literally the company is simply borrowing money from an investor, just like I was borrowing money from the credit card. But the government knows that if a company decided not to pay us, that they'd have us. There's not too much we can do. Example, bonds are in increments of, follow me because I'm going to make this macro in a second. Bonds are $1,000 increments, meaning that the company borrows $1,000 from an investor. What if the company just decided, I'm not paying you? What would you do? Whenever I ask this question, people always say, oh, I would sue them. Okay, I feel you. But in the Tampa Bay area, the average retainer to hire a lawyer is $2,500. So you're going to pay $2,500 to get $1,000 back from the company. So the government knows that the company has you. Therefore, the company is bonded by law to pay you back. And that is why a bond is called a bond. Everybody on this rectangle knew what a bond was, but you may not have known why a bond is, and now you do. It's called a bond simply because the company is bonded by law to pay you. So I just described two vertical relationships between a company and an investor. Equity side, debt side. But the real relationship occurs this way, horizontally. When the stock person decides they want to sell their stock. When the bond person decides they want to sell their bonds. So now you've got two markets that affect what we do every day. Stock market, bond market. And think about the fact that there are individuals who are paid to trade. Individuals who make money for clients, individuals who make money for companies, individuals that manage large portfolios, maybe for a state or for a financial institution. There are people who daily need to decide what securities to invest in so that they can manage whatever it is that they're managing. They can get a good rate of return. So a lot of times, the individuals institutionally that are participating in the foreign exchange market at the same time they're participating in this bond market, they're participating in this stock market. So let me pause for a second and tell you why I'm so glad we do foreign exchange. When you participate in the bond market, the interest is fixed. There's only a certain amount of interest you can make. And whenever interest rates go up, bond value goes down. Whenever interest rates go up, when interest rates go down, bond value goes up. So there's a risk associated with it. I won't tell you why now, but we can discuss that later. In the stock market, you've got to pick the right company. You have to decide that this company is going to do well and this company is going to do poorly. But in the foreign exchange market, we don't care. We don't care whether the company or the currency or the country or the nation or the area or the region or the continent does well or not. We just make money off of the movements. But the beauty of this question is that understanding how these markets work is important because it affects us. One of the things that Ms. Dyer said at the beginning of the training call was, we've been killing it with the US 30. Mr. Rogers has been outstanding in studying that market. And I remember when he first mentioned it a few months ago, and he's been all in and it's benefiting all of us. And I remember someone said a couple of weeks ago that the US 30 has the 30 biggest companies. Let's be a little bit more accurate. It's not the 30 biggest companies. It's the 30 best performing companies. Analogy so that you'll walk away with this. I have 3 daughters that all play basketball. They're all guards. They're all fast. They're not tall. Tall girls always get all the attention from the colleges. So there could be a tall girl that's tall. That doesn't mean she's good. There could be a little girl like my daughters. That doesn't mean they're good. So there are tall, sorry girls and tall, good girls. So when you say you have a good basketball team, it doesn't mean you have the 5 tallest. That means you have the 5 best. And that's the way the US 30 is. It's the highest performing, not necessarily size, but in terms of how they're performing. It's something to think about since we're talking about the US 30. Why do we love professors that drop the lowest exam? Because your score is always higher than it normally would be. But that's what the US 30 does. If a company starts sucking, guess what they do? They kick it out and put another company in there. So there's nothing wrong with that, doing that, but understanding that it makes you get why it does what it does. Why it moves as quickly as it does, why its movements are so predicated on what's happening in other markets. So to answer Mr. Rogers' question, equity financing represents the secondary market of stocks. Debt financing represents the secondary market of bonds. Because there are so many institutional traders that invest in all of them, and there's some individual traders, institutional traders, that only specialize in certain ones. There are a lot of players out there, and the decisions they make on a daily basis is going to impact us. Ms. Dyer likes to say this: I don't trade consolidation. I like it when she says that. She says it like my mom says, I don't trade consolidation. So she's right. She doesn't trade consolidation, but let's think about why there's consolidation. There's consolidation because all these institutions are making decisions to do this instead of that. And maybe tomorrow they'll do that instead of this. So this great question and us discussing this answer helps us to start having an awareness of why people would do what they do and why the market responds. I remember about 3 weeks ago, we were having a live trading night, and it was the night before the G4 summit, where institutional economic indicators were going to be discussed. And whenever individuals like that get together, you don't know what they're going to decide. So there's uncertainty. So the individuals who would normally be making trades are not waiting. Let's see what happens first. And I remember that night, Ms. Dyer kept saying, the market's not moving. I don't understand why the market, she didn't say I don't understand, but the market's not moving. The market's not moving. That's why there's uncertainty. So great question, great answer. I'm sorry, great question. Did I answer it correctly?
Yes, and could you lastly the correlation between the stock market and the gold, because those seem to invert based on what's transpiring?
So I actually, there's an old saying, the answer is in the question. I actually stated it, but forgot to state it. There is not a one-to-one correlation between stock and gold. If you look at the patterns of stock and you look at the patterns of gold, it's random. There are times when they're together. There's times when there's diverse. But what it's about, Mr. Rogers, is the concept I made about choices. If I'm in a situation where I don't trust what this is doing, I'm looking for alternatives. Just this evening, my eighth grader said, first day of school, my ninth grader said to me, Dad, I'm getting tired of messing around with Jada, because every time I ask her to do something, she never shows up. I'm looking for a replacement. I was so proud of her, but that's what institutions do. When the particular security or the particular market or the particular industry that they're looking on, they're not sure whether it's going to show up for them, they move to other things. So oftentimes when there's uncertainty in the stock market, gold goes up. It's not one-to-one, but that's a reason why that would happen. So, and I've heard people say something different than what I'm saying now. But I'm telling you, if you look at the patterns between gold and stocks, it depends on the reason why people are feeling whatever they're feeling about stocks, or the reason why people are feeling what they're feeling about gold. But the bottom line is this: if I don't trust Jada, then I'm going to go and find somebody new. So Jada is the stock market, and the gold is this new friend that my baby's going to find. Any other questions, comments, testimonies? Just between me and you, Rectangles, I'm kind of happy about that, because Jada gives my baby the blues. So I'm happy she finally saw it. And you all that have daughters or you all that have children know there's no telling a child that they have to see it on their own. So that's why my smile is so bright, that conversation happened today. There was a question that was asked earlier, and the question was about resistance and support. And it was a very good question. There was a very good answer, but you know me, I like to wireize it. If you know what you're doing, you will always have a job. If you know why you're doing it, you will always be the boss. So let's just think a little bit about these concepts of support and resistance. So right now, I'm sitting on a floor, and I'm not going through this floor. This floor is strong enough. The foundation below it is strong enough that it's holding me up. I can touch my feet on the floor, and it is providing a lot of support for me. Another way of looking at it is somebody in your life, somebody in your world who supports you. What do? They lift you up. Since you guys keep bringing up Jada, that's another thing I kept saying to my daughter. Jada's supposed to be your girl, but she doesn't lift. So the lifting up is the support. So when you think about that, it's the floor of a particular trading pattern. So sometimes when we ask really good questions like that and we get really good answers like that, we walk away and we remember. And I'm big, think about what I've been doing for the last 25 years. I've been teaching. And I've noticed that one of the best ways for individuals to process information is to identify it with something that they understand and make it real, to internalize it. So good question, good answer. I'm just giving you another way of looking at it. The support is the floor. It lifts, it keeps you up. Literally, I'm on top of this floor. I'm on top, the floor is supporting me. Now, when I look up above, I see a ceiling. So you could say that a resistance line is like a ceiling, but it will only be like a ceiling simply because of what Ms. Dyer said at the end of that answer. It's not a ceiling that's going to stay a ceiling. It's a ceiling right now. And the reason why it's called resistance is because what normally happens, if you just think about the last pattern that you saw, the last foreign exchange chart that you saw, there are certain areas at the top of that chart where once the return patterns get to a certain point, it falls back. It's getting to that line, and the line is giving it resistance. Well, let's really talk about in this moment why that's happening. What's really happening is that people have a mindset, institutional investors have a mindset of what they think is going to happen. So when they get to a certain level like that, they start to pull off a little bit. They start to wonder whether or not it's going to go past that amount. And like I tell my girls all the time, be careful what you think about. Be careful what you worry about. Be careful what you fear, because you'll bring it into your experience. So literally that's what's happening institutionally. They're wondering whether or not they'll be able to get past that point. And because they wonder whether they're going to get past that point, they're literally, with their collective consciousness, causing a pullback, causing resistance. I'm getting to that point, and it resists getting past that point. So next chart you look at, just look at it. Notice where the line is, and if you go all the way across, you'll see the same thing happening. It hits that point, and it goes back. It hits that point, and goes back. That's why it's called the resistance, because the pattern, the price, the movement, the market is getting to that point, and it's resisting going past that point. But when it does, guess what? We call that a breakout. Again, y'all keep bringing up Jada. I was happy for my ninth grader because she's breaking out, and she's looking, first day of school, and she's making this realization. And I know she's going to break out from this pressure that she was having with this friendship, and she's now going to align herself with people who vibrate a little bit higher than this young lady. I hope Jada, what if Jada's mom is on this call? So bottom line is support and resistance represent those things. And the same thing with support. The reason why it's support is because when institutional buyers when institutional investors start selling, normally they sell. Then when they get to that certain point, they start thinking, maybe I should buy again. And there's uncertainty, and that's what makes it go back up. So the support and resistance are more than just lines we memorize. They really represent the way in which the market operates. But once there's a breakout, once it goes past resistance, just like Ms. Dyer said earlier, now that resistance line becomes support. Now you have a higher support level. My daughter is now going to have a higher support level with this new set of friends that she's going to have. So once the resist, boom, it forces through. Now, I say this all the time. The patterns that we see in the market are just like the energetic patterns that we deal with in life. If you take a drop of water from the ocean, it has the same exact molecular impact as the entire ocean. So I'm saying that just to say that we're all connected in the way in which energy works. Oftentimes, when we get resistance, we do the same thing the institutional investors do. We delay, we debate, we're not sure, I don't know. But if you really understand the way energetic patterns work, just like we're beginning to understand the way these markets work, resistance is good, because the resistance is what is needed in order to break out into a new pattern and ascend to a higher level. How many of you in this moment realize that we do the same thing? If there's something in your life right now that is causing you resistance, it is not an obstacle. It is an indicator that you're about to break out into something bigger, that you're about to hit a stronger paradigm. Back to my daughter that y'all keep bringing up, for the last 3 days, there was so much extra arguing with Jada. It was through the roof. It was extra arguing. She was hitting the resistance. And then today, she broke out into a new pattern. So those things right now that you're experiencing resistance with, whether it's a spouse, whether it's a person at your job, whether it's your car, whether it's a child, understand what it is. It is an indicator. So instead of falling back, and pulling all the way back down to your support, recognize that if you just take a deep breath and recognize that the resistance is there for your breakout, break through it, get to the next level, hit the next paradigm, and continue to grow and ascend. Thank you very much. And I will now turn this call back over to our host and or hostess.
Dr. Bythwood, before we close out this call, I do want to let you know that you do have a question in the chat, probably address it on Thursday, but I want to let you know that there's...
Okay, yes, let me address that right now. Thank you for showing that. So I'm 52 as well. 52 is the new 22. So I hear you about being penalized, but let's look at this a little bit differently. I was driving on the highway today, and there were a whole bunch of cars. Vroom, vroom. And I remember one time I saw a bicycle, a dude riding a bicycle on the highway. Now, bikes are cool. People get in shape. They do all kind of stuff. They get you where you want to go. But bikes are not a vehicle that's designed for the highway. So to me, your question is stated in a way as if there's something wrong. You're basically saying, well, why can't I ride my bicycle on the highway? Because that's not what it's designed for. It's not about you getting penalized. It's about the fact that this vehicle was designed for your retirement. This vehicle was designed for you to be able to have a lifestyle based on the fact that we expected Social Security to dry up, and it has. So it's not about I'm being penalized. It's about this vehicle is designed for me to have it when I'm 59. So to answer your question, if you take the money out before 59 and a half, then you're going to pay about 25% penalty plus the tax ramification. So to me, it's not really worth it to do it. But again, that's what it's designed for. But I like the fact that when I look at it that way, then I say, hey, here's a treat I have when I'm 59, as opposed to saying I'm getting penalized if I get it before that. Because again, that vehicle is designed for that particular point. Does that particular person have a follow-up question based on my answer?
I don't see anything in the chat.
Okay. Thank you, Ms. Ainsley.
No follow-up question.
Okay.
No.
So basically what I'm saying, chat questioner, is rather than look at it as a penalty, look at it as a gift. And that will shift the way in which you view it and shift how much you'll be able to get out of it.
So yes, it was. So ladies and gentlemen, I just want to thank you all for being with us this evening. I want to thank each and every last one of you. What this call is designed to do, this was a Power Pack Tuesday. So it is a training call where you learn the skill set. And immediately following that, what this call is designed to do is to help you understand the why behind the what. Why are you trading? What are you trading for? To help you understand completely. Now, ladies and gentlemen, once again, ladies and gentlemen, this Saturday, we have Nez Vasquez. We have a BYOB, Be Your Own Bank Expo here in Jacksonville, Florida. So you want to make sure that you are here in Jacksonville, Florida, and you get registered at byobchallenge.net, byobchallenge.net. So let's make sure you get registered. The event starts at 10 a.m. This is about you learning how to think like a bank, act like a bank, and be your own bank. So this is definitely the place you want to be. It is $10 when you register now. So go ahead and get registered. $10 is $20 at the door. So let's make sure you get that registration taken care of. It is going to be standing room. We have Nez Vasquez. And then on November the 2nd, we have a leadership conference, a leadership training and development conference. You looking for leadership training, you looking to take your business to the next level. We are bringing in an industry expert who is going to help you take your business to the next level. that same exact link that I just gave you, byobchallenge.net. That is where you do your registration. That's where you get started. So someone is coming in that is definitely going to help you get registered. Someone that is going to help you take it, mold you, train you to take you to the next level. So ladies and gentlemen, and then Jacksonville, live trade Wednesday nights. Orlando, tomorrow night, live trade session. Live trade session. You want to make sure that you touch base. I'm in that event that I just, before I even go into the live trade session tomorrow, that leadership conference that I just told you about, the leadership and development, that's in Tampa, Florida. So tomorrow night, Jacksonville, Florida. Wednesday night, live trade session, Panera Bread, River City. Miss Yolanda Axon, you want to call. Also Orlando, Florida, have a live trade session. We do this live in person as well as on a call. Tomorrow morning, 5 a.m., same exact link. BYOBIamthebank.net. You are, and also at 9 a.m. and these times are Eastern Standard Time. You all have a wonderful and blessed evening, and this will officially conclude this call.